In the final Federal Reserve meeting of the year, the committee once again pushed interest rate hikes. They will remain where they've been since July at 5.25% to 5.5%. But the Fed also set the table for as many as 3 rate cuts next year. It's the first cut since March of 2020. It's something that really surprised Bankrate Chief Financial Analyst Greg McBride. He says it's a sign we're moving in the right direction.
The Federal Reserve is essentially done raising interest rates. They've done everything except come out and actually say that. Now, the question is, as we go into 2024, how long are they going to maintain interest rates at this high level? And just when and how much will they cut interest rates in 2024?
The Fed has been steadily raising rates since March of 2022 in an attempt to bring down interest rates, and it's worked in large part. The last month, it was 3.1 down from 9.1% in June. But before we get all excited about the expected rate cuts next year, McBride says it will be a while before we start to feel any of it in our everyday lives.
Interest rates took the elevator going up. They're going to take the stairs coming down. So even when we start to see interest rates come down next year, it's likely to pale in comparison to the increases we've seen over the past couple of years.
Now, he says we've started to see that with mortgage rates that are down a little bit, but he cautions because we won't feel the cuts quickly, credit card interest rates are still high, so paying off that kind of debt is going to be a priority still.
There are still 0% and other low-rate bounce transfer offers out there that you can utilize that really make a nice tailwind on the pathway towards debt repayment. On the savings side, the outlook is still very good. Even though rates are going to come down next year, they're probably only going to come down around the same pace as inflation for the most part.
McBride says now is the time to take advantage of those higher rates, certificates of deposit, because they won't get better in the month ahead. As for everyday costs, well, we're still feeling the impact of them. The Consumer Price Index that came out this week shows in November, shelter increased 6.5% from the previous year, and rent was even higher at 6.9%. Food was also up nearly 33%, and dining out was up more than 5% from the previous year. But a glimmer of good news for energy costs. They were down 5.4%, and gasoline prices are down almost 9% from what they were last November.